The US stock market has slipped ahead of Tuesday's highly anticipated Consumer Price Index CPI inflation report, with the nasdaq retreating from its record high. This development comes amid growing expectations that the Federal Reserve will maintain its hawkish stance on interest rates to combat inflationary pressures. The S&P 500 fell 0.6% to 4,340, while the Dow Jones Industrial Average declined 0.5% to 34,600. The tech-heavy Nasdaq Composite retreated 1.3% from its record high of 16,479, which it reached just last week. These losses are a reflection of investors' growing concern about inflation and its potential impact on economic growth. The upcoming CPI report is expected to provide crucial insights into the current state of inflation in the US economy. Economists forecast that headline inflation will rise by 0.4% month over month, while core inflation, which excludes food and energy prices, is expected to increase by 0.3%. These projections suggest that inflationary pressures remain a pressing concern for policymakers. The Federal Reserve has been closely monitoring inflation data in recent months, and its decision to maintain interest rates will depend heavily on the outcome of Tuesday's report. A stronger than expected reading could lead to further rate hikes, while a softer reading may prompt the Fed to reassess its stance. Market participants are bracing themselves for a potentially volatile trading session ahead of the report. The market's reaction to inflation data has been increasingly sensitive in recent months. For instance, when the April CPI report showed a 0.3% month-over-month increase in headline inflation, the S&P 500 plummeted by 1.2%. Similarly, after the May report revealed a 0.5% rise in core inflation, the Nasdaq Composite dropped by 2.4%. The current economic landscape is characterized by a complex interplay of factors, including rising interest rates, supply chain disruptions, and geopolitical tensions. As investors await Tuesday's CPI report, they are likely to remain cautious about their positions. The market may continue to fluctuate in response to changing expectations around inflation and monetary policy. In the face of these uncertainties, it is essential for traders to stay informed and adapt their strategies accordingly. By monitoring economic indicators and central bank decisions, investors can make more informed trading decisions and minimize potential losses. The upcoming CPI report will provide valuable insights into the US economy's performance in May. With inflation remaining a pressing concern, market participants are bracing themselves for a potentially volatile trading session ahead of the report.